up. Now, the answer is simply liquidity. It is not that fundamentals were not there before April 7th. Improving fundamentals were there. I have touched upon this enough number of times that the fundamentals continue to improve. It is just that the market did not recognize it simply because of liquidity. There was no liquidity as far as the FIIs were concerned. In fact, there was negative liquidity. And since they were continuously selling and going out, and they were all in the large caps, so you had this issue of the markets not reacting to any good news or any good fundamentals. March, of course, was a time when things started turning, but the retail money was very limited because you see, March, you have these year end considerations, tax considerations, and you also have this loss adjustments. So all in all, people lost an opportunity in the beginning of March. It came for a brief while in the first week of April, on April 7th, but before people could realize, the market had slipped away from their grasp. This is not new. I have been mentioning this again and again because I myself have been a victim where I used to think, okay, it's made a new low, so one should sell on every rally. That is what all the commentators who have not seen the markets or who have not participated in the markets are advising. I think that is wrong advice. I have experienced it. I have lost money by trying to simply short a fundamentally sound market. India is a fundamentally strong market right now because, RBI is continuously doing some things to infuse liquidity. Then the corporate results are turning out to be better than most people are expecting. You got monsoons which are good, inflations which is lower, and then you have SEBI also coming into play, apart from the budget, which I thought was one of the best budgets in the last 25 years. So it is all playing out right now. So what we call the Goldilocks scenario, where it is neither too warm nor too cold. So while we may look at Dow Jones, Nasdaq, and see that they are crashing, or the Asian markets which are crashing, but we tend to forget that between October and February, we were falling continuously for 5 months, whereas the global markets were making all-time highs on a regular basis. So now is our time. And liquidity, you see here, yesterday also, one would have been cautious at higher levels, but FIIs came in plenty and bought about 2,000 crores. DI has also joined the party, and 2,200 crores came from both of these institutions. So when institution buying is there, it's very difficult for markets to come down. So Nifty advanced for the fifth straight session, crossed at 24,000, which was the psychological mark. Yesterday I had mentioned about a inverse head and shoulder, and that's what seems to have happened. And that seems, if you go by that pure technical analysis, at 25,600 should be the target. So Nifty is now above 200 DMA. It has hit a 3-month high, and Nifty mid cap and small cap hit a 2-month high. Nifty PSU Bank hits year-to-day high, and Nifty Bank, of course, went on to hit a record high. It is only the financial services index which had hit a record high till yesterday. Nifty Bank powered its way to an all-time high. So if you're still bearish at these levels, I really don't know how to answer the question, excepting the prices answer the question, which clearly says that we are in the early stages of a bull market. Whether you want to call it a bull market, at least let's call it a bullish phase. I expect this to continue till at least August 15. Nifty Energy hit a 2-month high. Pharma, everything hit was in positive territory, excepting FMCG, which I continue to be bearish. Even IT, which I'm bearish on, went up by about 2%. Nifty Metal hit a 1-week high. There are good news for Nifty Metals. We'll just talk about it in the next couple of minutes. So what are the cues this morning? There was a sharp sell-off in US markets. The European markets were closed for Easter Monday. And there is a fight between Trump and Powell. So that makes, this uncertainty prevailing in the US. It looks like money is moving out of US, like what money moved out of India to other markets between October and February. Now it looks like money is moving out of US and other markets and coming into India. So you've had S&P down to 2.4%. Dow at one time was down 1,200 points. And Dow futures, of course, have now recovered. Now Dow futures was about 200 points up. Nasdaq also has recovered brilliantly in the futures market. We don't know what will happen today's opening, but we still. So Trump is very confident that he'll have a deal with the EU, like he was confident that he'll have a deal with China. And so the hallmark of yesterday's move was gold. Gold made a record high at 3,450. We had gold bees for the last 3 years, actually from 2022. So we have sold everything in our kitty. So we have only hold silver through silver bees, and we have entered into copper, which I believe is the new gold. So we have copper and silver on the commodity basket, and gold we have let it go right now. I will watch it closely. If I get it at 15-20% lower, then I would like to re-enter. Gold is still in a long-term bull market, but I think in the short term it is highly overheated. That is as per my analysis. I could be wrong because the forces which drive the prices of gold are far, far superior, and they don't look at technical analysis. So, but anyway, that is what our trading strategy is. So Brent crude is strong because there is some, tension on the Iran situation. So incidentally, dollar index came down below 99. It's around 98. Actually, at one point of time, that come down below 98 also. So RBI has changed the LCR, that is liquidity coverage ratio framework. The amendment which should help the banks. It will improve the LCR of banks at aggregate level by around 6% as on December 31st, 2024. So the idea is to improve the LCR coverage. This is a good reform, and I think banks should benefit. Though today you may see some volatility because the banks have gone up too much. But nevertheless, these are things which are positive for the banking sector. And for the metal sector, government has imposed a 12% safeguard duty on certain steel products. It has notified it on non-alloy and alloy steel flat products for 200 days, or earlier. If they want to change it, they'll change it earlier. So this 12% safeguard should give a sentimental boost to all the metal companies, especially the steel companies. Then we look at positive fundamental data, which is the 8 core sector data has gone up from 3.4% to 3.8%. Coal production, though it's flat, crude oil production is down. But generally, overall, steel production has gone up marginally, and cement production also has gone up. And electricity production has really bounced. See, electricity is very important. Electricity production is very important because the demand is always outstripping the supply. So it's very good data. Fundamental data is very, very good. And yesterday, JD Vance, the Vice President of US, started his tour of India, and they had a meeting. But I think after the meeting, it is very, very bearish. This one news which has come from the USTR, which talks of there is a serious lack of reciprocity in the trade relationship with India, and they have to. I mean, India's constructive engagement has been welcomed. So which means India will reduce their tariffs significantly. So we should expect things to be better for India, because inefficiencies will get eroded. Initially, some of the industries will suffer, but the market will welcome it like it welcomed in 1991, 1997, and 2001, when customs duty were slashed dramatically. The markets went up, though the industries which are affected suffered. So that is what one has to accept, that in a globalized economy, you will find things. Some of the inefficient industries will suffer, but for the market, it is good. So I continue to be bullish. I was bullish yesterday. I will again buy on declines. You have to be very selective now, because a lot of volatility will be there today. But whatever you do, I hope it is successful. Thank you for joining me.